Hey, welcome. So today I'm going to go over the exact strategy to turn any stock into passive income. I'm talking about weekly or bi-weekly checks with stocks you already own. Listen, if you have any type of portfolio, if you own any stocks at all, you need to pay attention to this particular video. Let's get into it. The first thing you need to know is that every stock that you own is actually an income producing asset. What do I mean by that? It actually has the ability to produce income for you if you know exactly what to do and exactly how to do it. This strategy breaks down into two ways. The first one is the regular covered calls. The second one is what I call the poor man's covered call. So depending on your capital, as long as you have 1,000 US dollars, 1,000 smackaroos, you can take advantage of these strategies. Or if you have 100 of any shares, you can do this step by step. But let's dig into the numbers and show you exactly how this will work. So let's dive right into it. What exactly are covered calls? Great question. The first thing you need to understand is in the world of options trading, everything equals 100 or everything becomes 100. And this is one of the skills that you can use to actually grow your income repeatedly. See, people don't realize that the poor and the rich work in two different income brackets. The poor and the middle class usually work for a W-2, which means they're trading time for their money, and the rich work for three types of income, and here they are. The first one is portfolio income. That is the amount of money you have in your stock portfolio, i.e. the markets. The second one is what we call rental or passive income. This is income that comes from real estate. And then the other one is called capital gains. This is income that comes from business or some type of intellectual property or some type of sale. And if I actually was to classify it, intellectual property is one of the newer ones I would classify as its own type of income, intellectual property. And the thing about it is that for you to make income in these levels, real estate, capital gains, intellectual property, usually needs a lot of cash. You need a lot of cash, a lot of experience, and then there's a big chance you can make a mistake. But when we come to portfolio income, this is where the level field is played. This is where all you actually need is information. And if you can learn information, you can make the same returns and even more as everybody else in the market. For example, this scenario where we're talking about covered calls and the poor man's covered calls, this is a scenario where anybody can do this starting with $1,000 all the way to $1 million and make somewhere between 5 and 10% of their cash balance a week. I'm going to say that again, a week. Literally every 7 days, you can make 5 to 10% of your cash balance in cash paid to you by the stock market. This isn't just fluff. This isn't just theory. This is something that I've actually done. Matter of fact, if I can, I'm going to put a little video here somewhere or a screenshot of a trade that I'm in right now where I got filled, and you'll see it says I got a credit. I actually got a credit. I got paid to take this trade. But first, let's start with the very basic version of it, which is covered calls. Covered calls is like learning your ABCs when it comes to passive income in the stock market. I relate covered calls to like renting out a property. It's like renting out a property that you own. In the stock market world, the property that you own is your stocks. And guess what? If you own 100 of any stock in the S&P 500, you can actually sell covered calls. What does that mean? You can actually put a tenant into your house, into your stocks, quote unquote, and get paid for doing that. So how it pretty much works is this. If you own 100 stocks of any company in the S&P 500, you can sell one contract. And notice I said the word sell, not buy. And here's another word or another thing that separates, again, the rich from the poor. If you want to get rich, and I'm talking about relatively quickly, you want to be on the selling side, because what that does is it brings in cash flow on a step-by-step basis. When you're buying, you're trying to multiply capital. When you're selling, you're generating income. So in that situation, when you're selling, your cash becomes an asset. On the other side, when you're buying, your cash is like an employee. So think about it in terms of yourself. Do you want your cash to be an employee or an asset? Which one would you rather have your cash be? They're both good. They both produce money. But depending on what your results are and where you're starting, You want to know where you want to eventually get to the selling side of things. I still do both, but I just want to show you what side you rather be on, right? So if you have 100 shares of any stock, let's say the stock here is Apple, or one of my favorites, Tesla, you can sell one contract and get paid a premium for that contract. And how it works is, let's say Tesla is at $340 today. And you say, hey, by next week, if Tesla doesn't get to 370, guess what? I'm going to get to keep the premium you paid me. And the reason this happens is that somebody wants to buy Tesla at 370 because they think it's going to go higher. So they're going to write a contract with you and say, hey, you own 100 shares of Tesla. Mind you, that doesn't mean that you own Tesla at 340. You can own Tesla at 200. It doesn't matter. And here's where it really gets good. Pay very close attention. Let's say you own Tesla at 200. Joe Blow comes to you and say, hey, I think Tesla, I want to get it. It's going to go past 370. So I want to write a contract today for Friday in a week. And if it gets to 370, you agree to sell it to me. You say, I'm a nice guy. I'm going to do that. Well, for agreeing to sell it to you, he's going to pay you, let's say $500 up front to do that. And guess what? You own Tesla at 200. So if it does get to 370, you have to sell him your shares at 370. But not only do you make the 500, you make the difference between the 200 and the 370 per share. So remember, in this example, you own 100 shares. If you only did 200, this contract gets executed at 370. You make $170 per share times 100. Guess what? You just made an extra $17,000 plus the 500. You just made $17,500. Yes, you don't have the shares anymore, but you can always get into it by doing the opposite side of this strategy called cash secured puts. And I'm going to put the video on here as well, so you can check that out next. But this is exactly how it works. Josh, what if in a week it doesn't get to 370? Because that's literally a 10% move. Tesla might not move 10% in a week. Great. You get to keep the 500. And guess what? You get to do it next week and next week and the week after that. And that's only with one contract, 100 shares. So if you own 500 shares, you can do 5 contracts, etc., etc., etc. So there's actually a strategy where people literally go and buy stocks, not for the purpose of owning them, not because they love the stock, but just purely for the fact that they want to do cash, just purely for the fact they want to do covered calls. Now, they always choose great companies, and they always choose companies that they like. But their original intent might not be to hold the stock for a long time. Sometimes their original intent is to generate cash flow doing this exact same method. But I want to show you some real world examples of this. I just Googled Tesla's options chain right here, and we're going to pull it up. And this is the call side. This is for the end of this week. So let's go to, today's Tuesday, and this is for the Friday of this week. So let's say, again, Tesla's at 340, right? Let's go to the next week to give it like a whole 8 days, okay? And the time of this video is August 13th, I believe. Let me see. At the time of this video is August 12th. So August 22nd, which is literally 10 days away, okay? Tesla's at 340, and you want to say, hey, if it gets to 350 or 370, you're willing to sell it to them? You can see at 350, you're getting paid $660 per contract. Why $660? Because even though this says $6.60, remember in the options world, everything is times 100. So really it's $660. Everything is literally $660. So that's what you have to know and pay attention to. And that's if you only own 100 shares. If you own 200 shares, then you make $1,320. I'm just doing the math on top of my head. If you own 3 contracts, then you would make $190, and so on and so forth. So people literally come in, let's say they had 10 grand or 50 grand, whatever the case may be, they will buy Tesla shares and they will sell. But guess what? This doesn't only work for Tesla. You can do this with something as cheap as SoFi. Now it's $23. That means to own 100 shares of this, you only need $2,365. And now with $2,365, you get to buy a stock that you like, that you believe is undervalued. But not only that, you get to go and sell the options on it. Now, let me show you what that looks like on the options chain with the exact same trade. So let's say next week, let's make sure we have the right time. Okay. You own 100 shares of these. Let's say you bought it at $20. You just go and you say, hey, I'm willing to let it go at $26, which means you've made a 40% increase on the stock. Guess what? They're going to pay you $19 for this. Okay. Now that might seem small, but on a percentage gain, $19 for every 2,300, like 1.2% a week, which means you're making 5 to 10% on your cash every single week. But what's more important than that people forget is, remember, you're bought it at 20, you're selling it at 26. So you're already making $600 off the top per contract. And premium that they pay you is icing on the cake. Now you're starting to think how you can actually take the stocks you already own and sell it. But here's a smart way to do it, something you need to pay attention to, and that is the word delta. What is the word delta? It's something very beautiful. In the world of option selling, the word delta tells you the percentage chance that the stock is going to get to this level in the next 10 days. And the beautiful thing is, if you choose something far enough, that money you're going to make is almost guaranteed. By almost guaranteed, you can choose something that has a 95% probability going your way, and you get to keep the premium. So the reason I'm going further out is not because I don't want more premium, but I checked earlier, the delta for SoFi at this level is like 10%, which means there's a 90% chance I'm going to get to keep all this money. I'm going to get to recycle this over and over and over again. So if you know that every time you do this, you're going to make $20 to $30, and on the worst case scenario, you're going to make $700, then the best thing you can do is buy as many shares as possible and do the strategy over and over and over again so you start generating monthly, weekly, and passive income for yourself. And that's for owning the shares. What if you don't own the shares? What if you only have $1,000 to work with? You don't have 2,300 to buy SoFi. Well, there's something called a vertical, and I'm going to a vertical. Hey, I only have $1,000. I can't afford to buy 100 shares of Tesla or SoFi. How do I make money on the same move? Good question. I'm going to explain to you first, then I'm going to lower my screen and show you an example in the actual charts. So vertical just means you're selling a call and then you're buying a call. And what this actually does is, you don't even have to own the shares when you do this. So let's use Tesla as an example. We saw Tesla was at the stock price of 340. I can say, hey, I don't think Tesla's going to get past 370. So I'm going to sell the 370 call and I'm going to buy the 380 call. The reason we're buying the 380 call is because we don't own the shares. So we have to buy contracts to own the shares in case it blows past our window. And what we have our risk is our $1,000. That's the risk. But you can generate income even more so than selling the covered call in itself. So for example, we saw with Tesla that if we sold a covered call, we would make about $500 for next week. But here's the caveat. If we bought Tesla at 200, like we said, we needed 100 shares, which means that we needed 20K to make that 500, 20K in shares to make that 500. The beautiful thing about this, guys, is that your 401K that you're buying the ETF S&P 500 in, this is a good reason to start buying actual shares in stocks. Just a little side note there. But let's say you don't have 20K, you only have 1K. I can show you how with that 1K you can make about $100, which means if you had 5K with a quarter of the with the quarter of the cash, you can make the same amount of money. I'll show you that right now. If you look right here, this is my Thinkorswim chart. And what you're seeing right now is Let's go to Tesla. And for next week, like we said, I spoke to you guys about this word delta right here. Delta tells you the probability of it going to happen. So let's say for next week, we wanted to sell a delta of 10%, which means that is only 10%. There's 90% chance that this is going to go in my favor, and I'm going to keep the whole $130 in premium. See, this 130 is what they pay you for this trade if you're doing a covered call. But let's say you don't have $20,000 to buy shares. You can do something called so what you do is you come here, and then again, you want something safe. So for now, you hit right click and you go vertical, and then you do the 380. You sell the 380 and you buy the 390, just like I explained before. Or if you want to do the exact example that I did, you sell the 370 and you buy the 380. And if you see, look here, you're going to get paid $86. So if you had the $20,000 in cash and you had the shares at the same level, you will get paid $130. If you only had $1,000, you would get paid $86. So you're getting paid more and leveraging your cash better. And here's the key. If you, with that same 20K in cash, if you put that into the trade, instead of just buying the shares and you just did this vertical with that same 20K, you will make 16 and literally one August 22nd. So literally 20K will print you almost 10% of your cash. I told you guys that every single week. So that means every month you're making like 40% on your cash. And the beautiful thing, point started the 370, the delta here is 0.16, which means that there's an 84% chance it's going to go in your favor and you're going to get to keep all that money. So that's how you do it. If you have questions and you want me to do a breakdown of this strategy a little bit more, a little bit more in depth, I'm going to do that. Just comment breakdown below. And I always say, if you want the top 5 favorite stocks that I'd like to do this on, I'm going to drop the link to my newsletter as soon as you sign up. That is going to be sent to you. Chat soon. Knock, knock, pardon the interruption. Listen, I usually don't do this, but I feel like it's super important to actually share this with you. One of the secrets to my wealth and success in business is somebody who's made millions online and in life is literally my relationship with God. The market is a very funny place, right? On top of the education, on top of the learning, there's a secret ingredient that I feel like is super important, and that's favor and wisdom from God. So I'd like to invite you into a personal relationship with God right now. If you don't have one, all you have to do is pray a simple prayer. Say, God, thank you for dying for my sins. I believe in you. I believe in my heart, and I confess with my mouth that you are God. And I ask you to guide me and lead me in all things around my life. So if you said that prayer, just type an amen below and reach out to me. You can email me for more resources and I can send you some more stuff. Okay, guys, back to the regularly scheduled content.